Good day, fellow investors. My name is Sven Carlin, and I'm here to tell you that the dividend is the best way to get rich in the long run. And I just made a video called Dividends Are the Answer. They're very nice. Dividends will make you rich. Welcome back to Strongman Personal Finance. My name is Christopher Belli. I'm a certified CPA accountant. I'm a long-term bubblehead investor. I'm author of the book Stop Being a Broke Loser. It's on Amazon. And Sven Carlin has really been pissing me off recently. He just talked about index funds and how they won't make you rich, but dividends will make you rich. How many times do I have to tell you people? What is a dividend? Okay, I'm going to talk about it from the accounting perspective. The company declares a dividend. What the accountants do is on the date of declaration, they debit retained earnings. That's an equity account. They reduce the equity account, and they accrue a dividend payable. And then the dividend is paid, you reverse out the payable, and you send out the cash. But think about what we did. We reduced equity. We took value worth from the business, and we paid it out to the shareholders. That's all a dividend is. And a stock price, when a dividend is declared on the ex-dividend date, the stock price goes down. That's all it does. The stock price goes down in proportion to the amount of dividend paid. Nothing happens with a dividend except a taxable event. So let's watch this stupid video by Sven Carlin, and I'm going to give you my thoughts.
The stock market is a little bit shaky lately, and many of you ask whether dividends are the way to go today. And even in the poll we made, most requests were for dividends. I'll also make Europe, and I'll also discuss real estate. That was highly requested. So for that, I thank you very much.
Thank you very much.
Of course, make sure to dividend up that like button to support the channel and that it pays dividends for this channel forever. Thank you very much. Let's talk about dividends.
What is a dividend?
Now, as the growth hope has deflated a little bit, the old tech changing the world is a little bit subdued. Many of you think, okay, dividends are the reality. In the investing world, we should now look for safety, for value, for dividends. And let me show you.
No, you don't need to look specifically for dividends. Dividends are the result of profitability. Usually, if a company's not profitable and they're paying out dividends, that's a problem. But when a company pays a dividend, that means they are profitable because they have an increase in retained earnings. You close the books every year, retained earnings increases. And then the company has the ability to pay out a dividend to the shareholders. They usually do that because they have no better way to invest the money. They could use the money to buy back shares, or they could use the money to reinvest in the business. If they don't have anything to reinvest in, and they don't want to buy back shares for whatever reason, they might pay the shareholders a dividend, okay? It's literally a check that reduces the price of the stock. Dividend goes out, stock price goes down. Now, if you reinvest the dividend, you're going to have more shares of the stock, but since the stock price has gone down, nothing has changed in the company's valuation. And on top of that, all you're going to do is get a freaking tax liability. It doesn't make sense to just specifically look for dividends. What you need to look for is profitability. Now, what he's going to basically say is, at the end of the day, how do you get a return, an actual return? Well, you get cash. You put money into an investment, and it pays you money back. That makes sense. But what drives stock prices in the long run is the ability for a company at some point to return value to the shareholders, i.e. pay a dividend. So you can buy a company that has no dividend, like Berkshire Hathaway, and you can still make a lot of money on that stock because the company has the ability to pay a dividend. It is profitable. You want to look for profitability, not specifically dividends.
Why? You are completely right. Dividends are the way to go now, but also in general. So that's investing. Dividends are the result of investing. And yes, we'll also discuss Berkshire doesn't pay dividends. Yeah. So let me...
They don't pay dividends because people see it's profitable, and at some point they could pay dividends. But you don't have to buy a stock simply because it pays a dividend. What you're going to do is narrow your investments to a certain part of the market instead of buying the whole market.
Let me show you something here, the importance of dividends over time. This is a great article by Professor McQuarrie from the Santa Clara University showing
Who?
stock market charts that you never saw. So very clear, an initial 10,000 investment in the stock market in 1927 is now 9.3 million of nominal wealth. This was in 2008, so now even higher. And this is the chart. We all know stocks only go up. Nothing can go wrong there. Sven, you're an idiot because you say that index funds are not that great, blah, 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 blah. But let's look at this. During the...
Blah, blah, blah. Index funds aren't... Yeah, you've said that multiple times, clown. Because you want people to sign up for your little course, pay you $500 a month, so you can analyze individual stocks. Most of your subscribers will underperform the market. They don't have time to analyze freaking stocks all day like you do.
1852 to 1942 period, inflation was intermittent, so deflation, everything was there, stagflation. Dividends accounted for almost all the total return. And this is a chart that nobody's showing you, how for 70 years stock went nowhere,
You'd still make money if you dollar cost averaged.
So anything can happen next. But let's dig deeper. If we adjust the returns, the chart we have seen with inflation, and deduct the dividends, the 10,000 that went to 9 million just make 33,000 in real final wealth. And this is a chart, again, that nobody shows you. So yes, stocks go up, up, and up, but in real wealth and deducting dividends, you see that there are big dry spells and nothing. So this is again 50 years of nothing, and then a little bit up, down to 2009. Now we are up again, but it's very likely that from this up here, we'll again have a lot of years of nothing. So if we account for this inflation and dividends, the truth is that since 1928, dividends plus inflation accounted for 99.7% of the nominal wealth produced as of 2008 by investing in stocks. So yes,
by investing in stocks.
Dividends and inflation, that's why dividends matter. So when you think about...
Yes, dividends matter, Sven, we know. Because when a company pays a dividend, their stock price goes down. And if you take the dividend and you spend it, and you don't reinvest it, yeah, you're giving up a lot of return. But a stock's total return is its price appreciation plus the dividend, okay? Dividends are not the magical cure-all. It's just the company paying you out of their retained earnings, out of their equity. That's it. You should always reinvest your dividends, but you should not focus on dividends as the sole part of your investment. Imagine skipping out on Berkshire Hathaway because of this guy. Oh, they don't pay a dividend. And look at all the freaking appreciation that Berkshire Hathaway has experienced because it has the potential to pay a dividend. I mean, theoretically, yeah, it makes sense. Okay, oh my God, if nobody ever paid a dividend, what value would I actually get from a stock? Really nothing, because nothing's being returned. But everybody knows at some point a company can start paying a dividend. So you don't need to worry about a company not paying a dividend right now, as long as it's profitable, okay? Because at some point they can.
About it, yes, it is all about dividends. Let's dig deeper. And then, of course, I make a valuation of the S&P 500, and I get comments, Sven, I cannot understand your valuation on dividends. Now the world is different, and you should value on earnings, buybacks, this and that. Why don't I stick to dividends to give you the real value? Be conservative. If you're right, good. But be careful if... I don't know what these...
Okay, so... this is another thing that pissed me off. So what he did is, well, you know, all you got to do, and this is what people are going to do when they watch this video, they're going to look for ETFs that specifically pay a dividend. So you got Vanguard Dividend Appreciation, US Dividend Equity, blah, 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 blah. If you invest in one of these funds, especially in a taxable account, you're going to be, number one, very narrowly investing in only a certain segment of the market, which is not good. You want to buy the whole market. Because, you know, according to the efficient market hypothesis, which you can agree with it or not, stocks represent all, you know, public or all known information. Stock prices represent all known information at the time. But if you just buy one of these, you're just going to be in one tiny part of the market. And if growth continues to do well, you're screwed, okay? This whole video is freaking stupid. I don't get the dividend thing. It never made sense to me. Dividends are a reflection of earnings. No earnings, no dividends. Exactly. So you don't need to worry about a dividend. You need to look at the company from a fundamental basis and say, are they profitable? And at some point, can they pay a dividend? And if they never do, who freaking cares? Because people can look at the retained earnings balance of a company and say, well, they have the potential. And I don't really care if they pay a dividend at any point, perpetually into the future. That's kind of how it works in the real world, okay? You could say, oh, well, if you never pay a dividend, technically it's worthless. It's BS. It's not how it works in the real world. Don't listen to this crap, okay? Buy a total market index, preferably globally. Don't focus on dividends. Don't narrow yourself to one part of the market. And don't worry about it, because what you're going to do is go to like a high dividend paying company that is just going to pay you a lot of dividends, and you're going to pay a lot of taxes. And yeah, it shows up on your tax form. It's like on line, 3 or 4? And what are you going to get? Subpar returns compared to the market. What a freaking joke, Sven. Come on, man. You can do better than this. I know you have a PhD in finance, but you can't trick me, boy. Anyway, that's it. I don't like this freaking video. I don't like some of the things he teaches. He's not dumb, but it's so freaking weird. Like some of the stuff that he preaches on his channel. And he wants you to sign up for his course. $500 a year? Come on. What a joke. All right, let me know your thoughts. Have a wonderful day. Cheers.